Now, there is a huge controversy brewing on Wall Street about a new trend called high-frequency trading. A controversy because critics say it's hosing the little guy and making them pay more for stocks than they should or would. Joining us now, one of the guys who started the controversy, Joseph Saluzzi. He's co-head of equity trading at Themis Trading. That's because he wrote 3 white papers that everybody's been talking about. We're going to talk about them. And Irene Aldridge, managing partner at Able Alpha Trading. She's the author of High-Frequency Trading, and she says, hey, this is just another good new innovation. But Mr. Saluzzi, let me start with you. So you've got these white papers out that everybody's talking about. High-frequency trading, if I understand it, I'm one of the big guys. I can pay the exchanges to see orders before everybody else.
That's correct.
That's the bottom line.
Well,
why is that not front-running?
Well, it is. It absolutely is. And there's different types of high-frequency trading, as I'm sure your next guest will say. But there's program trading, there's rebate trading, there are these front-running orders that we're talking about called predatory algorithms. There's all sorts of it. And the key here is 70% of the volume that's going on all of the exchanges is related to high-frequency trading. Certain people with big computers, let's just leave it at that, can pay for a co-location service like you just mentioned. They will pay the NASDAQ and pay the New York Stock Exchange, and it's a good chunk of their revenue.
Let's highlight that co-location. That means putting their servers right there on the ground, and because of the laws of science, they actually get information faster than everybody else.
That's correct. And that's why the retail investor and the institutional investor is currently at a disadvantage to this class of investor, which represents 70% of the volume. And this is a subset. The co-location guys are a small percentage.
Okay, let's bring Irene into this. Irene, why isn't this basically front-running, and do you agree that it puts the little guy or the average investor at a disadvantage?
First of all, it's a pleasure to be here. And Mrs. Saluzzi, I'm so happy to be able to square off with you because I read your paper and you know, I could not disagree more. First of all, there's nothing new about high-frequency trading. You do high-frequency trading. You have prop trading staff that is trading right now, but they're trading it manually based on their instinct. And all high-frequency trading does, we're just introducing computers into the marketplace. So think about it. It's like taking a slide rule that your grandfather may have had and replacing it with a computer just to do faster multiplication.
Irene, though, what about paying for access, though? What about those firms that pay for access to get order information before other people?
Yeah, well, first of all, this is not what high-frequency trading is about. Everybody knows that front-running is illegal, and it's especially in equities, and it's strictly monitored, and we're not talking about front-running and high-frequency trading are completely separate issues. They have nothing to do with each other. All we're talking about in high-frequency trading is we're actually looking at fast turnover of capital.
Okay.
So instead of holding for 5 minutes, we're talking, sorry.
First of all, I'm happy to see a human here on the other side. I was expecting to debate a supercomputer like a HAL 9000 maybe. So it's great to see. But I applaud the high-frequency traders, to tell you the truth, because they are capitalists taking advantage of a system. But the problem is the equity market structure is corrupt. It's wrong right now. It needs to be fixed. And the problem is starting at the exchange level. They pay for rebates for these guys it's a payment for order flow scam, it's a co-location scam, and they got these sub-second orders which are called flash orders, bolt orders, or you know what they are, and that's what keeps you in business. If you didn't have them, you would be gone, and 70% of your volume would be out the door, and then what would happen to the equity markets?
Not at all. High-frequency trading actually provides service. It's not taking advantage of the system. It's actually a service of price discovery. High-frequency traders are able to locate through complicated computer systems, and kids, listen to this, study math. It's very important in the new economy. But through complicated mathematical programs or algorithms, they're able to arrive at the fair price faster.
Irene, I just want to get one fact down here, because it either exists or it doesn't. Are some people able to see the data of other people's orders ahead of time and able to trade in front of it using supercomputers?
It's illegal.
Yes or no?
The answer is yes.
It's
the answer is yes. You know.
It's illegal.
It absolutely is yes. It is not illegal. The exchanges are supplying you with the data. They're giving you the flash order, and if your fixed connection goes into their lines first, you are disadvantaging the retail and the institutional investor.
Are you disputing that? Are you disputing that if you pay a certain amount of money, you get the information before other people?
Well, it's illegal, and everybody knows it's illegal. So,
okay, it's illegal, or is it happening? I mean, the both can be true at the same time.
It is illegal. So if it's happening, then these people are breaking the law.
And the annual reports of the New York Stock Exchange and NASDAQ, and they'll show you the co-location fees are tremendous. They're making a fortune off of this.
Let me explain to you
Wait, he's talking about a co-location fee. Does that exist or not, a co-location fee?
co-location is a very simple service. You put your computer next to the exchange. You rent an office, for crying out loud. Anybody can do this.
The retail investor can't put a computer next to the exchange. The retail investor's order, he could put a quote on the, I could be a retail investor. I want to sell 1,000 shares on the offering. If a supercomputer comes in, they can get that in front of me. They can sell the stock in front of me, and I was the guy responsible for the displayed quote. How is that fair to the retail or institutional
investor? Answer Irene's other point, though, which is, does this just get us to price discovery faster than we would have otherwise gotten there?
No, it doesn't.
Do we
Actually, it takes you away from price discovery. In the end, 6 months from now, you'll get to price discovery. But currently, the supercomputers seem to be on the buy side. I hate to say it. And look at stocks like Capital One today, and you'll see the rebate traders in their heyday. They sit there, they gap it up in the morning.
And then what is a rebate trade?
Exchanges pay high-frequency traders, as well as brokers, a fee to post liquidity onto an exchange up to 30 mils or a third of a penny almost, depending on the size of your, if you have 100 million shares a day, which is what these guys are doing, a third of a penny just to buy the stock, and then they turn around and sell it at the same price, so they've collected almost 2/3 of a penny, or sometimes a half a penny, depending on their size, for doing nothing. So 70% of the volume, they're not providing, they provide volume. Volume and liquidity.
What's the difference?
Because liquidity can go away tomorrow. If they decide to shut the computer, we're down 70% on volume. Look, volume is what they're doing. They're just like when the NASDAQ market makers didn't pick up the phone in 1987. These guys can shut the computer off on a bad day.
Your definition of high-frequency trading is completely off. There's so many strategies, and most of them do not involve rebate trading. Most of them involve game theoretic issues, and it has nothing to do with rebate trading.
You're making it sound like sophisticated, man.
Read my book. Read my book.
Yeah, I know, that's why I don't have a book. I don't have a book.
Why shouldn't there be a speed limit on this highway where everybody has to go at the same speed? If somebody can trade, I forget all this other complicated stuff like co-location and rebate trading, but why, if somebody can make a trade at 0.03 of a millisecond or of a second, and I have to wait more time for a rebound, that's unfair to me, isn't it?
Sure. No, it's not unfair to you. And I'll tell you exact example. For example, now you have stocks like large stocks, I don't know, IBM, that trade both in London Stock Exchange and New York Stock Exchange. And suppose, due to Mr. Saluzzi, who is trading here like a turtle, that these things, the prices are misaligned. You agree that stocks should be trading in the same thing.
I help my institutional clients provide liquidity.
Let me finish. So basically, one of the high-frequency trading strategies is actually arbitraging the difference in prices between exchanges, London Stock Exchange and New York Stock Exchange. And this is a service. And for the service, high-frequency traders need to be
news breaks, Joe, if news breaks and Microsoft is out with earnings and somebody can get in and make that trade faster than I can, they get a different price.
That's correct. And the New York Times article this morning pointed out a perfect example with Broadcom, how it gapped up 20 cents and the retail guys are getting nothing. Look, these 70% of the volume are controlling too much. The SEC and the regulators need to look at the equity markets, and these guys are not doing anything wrong again. The high-frequency trader, there's nothing illegal, Irene, about what you're doing, but you know it is not ethical. It's not in the spirit of Reg NMS. It's not spirit of the rules.
How dare you accuse us of being unethical?
Unethical.
You're unethical.
Read the rules. Read Reg NMS. It's displayed liquidity. That's what you're not doing.
No, but we're cutting margins of brokerages because, because you cannot compete because you don't have the proper skills.
We have found a new power grid.
Your computer doesn't blow up tomorrow, okay? Make sure the fuses are okay.
Bill and Irene.
All right, let's go back to the...
I think.
Well, let's go back to the hearing because...